you're a property investor. How do you choose your property portfolio? And how do you know which are the best deals to work on? Now, in today's episode, we have Sean O'Dowd, and he'll be talking about how to build a real estate fund. He's the CEO of Scholastic Capital. And at Scholastic Capital, he creates the opportunity for investors to partner with his company through his laser-focused strategy of buying single-family homes in elite school districts and renting them to families on 3+ year leases. And their investors love their planned monthly distributions, equity growth, depreciation, pass-through, minimal use of leverage, and the multi-year leases to tenants. Now, first question I have is, what's the secret to your success? And does it have anything to do with building a property fund?
Welcome to Awakened Titans podcast with Lily Patrascu. Mind-blowing conversations with influential business titans sharing how you can manifest abundance, love, joy, success through quantum awakening, quantum manifestation, quantum healing, quantum miracles, exponential business growth, and innovative products and services.
I think at the end of the day, it really comes down to focus on strategy in terms of knowing exactly what we're doing. We have a really specific type of home that we're buying. We have a very specific place that we're buying those homes. And there's a reason behind why we do all of it. But because we have that in place, it makes it very easy for us to be very focused, which is what really leads to the success at the end of the day.
Thank you. So tell me more about the success you've already had in terms of helping entrepreneurs, companies to set up a real estate fund. Tell us about how it works, how it worked out for you first, and how are you helping other entrepreneurs to make this happen for themselves?
Good question. So from on our standpoint, like it's a pretty detailed process to actually build out the fund and get that all put together. All in, it's about 2 years. This is an SEC regulated industry, so there's a significant amount of legal work. There's a significant amount of accounting work necessary to kind of put this together. So like at a bare minimum, you really need a securities focused law firm. You probably should work with one of the bigger ones like a Kirkland or a DLA. And then you need an accounting firm to do fund administration. And then you need a separate accounting firm typically to do audit and tax prep. So getting all of those people together and then putting together the actual fund documentation, the LPA, PPM, it's about a year and a half, 2 year process, kind of if done at a decent clip. So that's one standpoint. And regarding the like helping others to do it, I'm always happy to chat with anyone who's interested in going down this path. That being said, I actively discourage most that I end up talking to from going down this path. It is not an easy process to do so. It's not a cheap process to do so. And if you really want to go down this path of managing outside capital, like you need to be going in with the mentality of this is going to be a 10, 15, 20 year endeavor.
Thank you. So tell us more about who are we targeting here in particular? Like what kind of entrepreneurs should consider setting up a real estate fund and why? Like what kind of bracket in terms of like kind of money that they would want to invest and why should they do that?
Well, transparently, like they shouldn't do it unless they are of a mentality of like, hey, I have a specific thesis that I feel really good about. It's one that I've tested myself with my own capital for some period of time. It's something where I'm going to be able to raise minimally $5 million is like bare minimum. It needs to be closer to probably 10 to 15 for it to be economically viable, because you have to pay all of those accountants and lawyers and everything out of fund fees. That's typically 1% to 2%. So you got 1% of $10 million, that's $100,000. Like that's your legal and accounting bill right there. So you really need to be committed to the idea of like, this is a long-term growth mentality to build this out.
Okay, but tell us why they should consider doing it, for example. Okay, you said you shouldn't do it. Mostly for most people, it wouldn't work. But tell us why it would work for and for who? Why would it work for them versus just, let's say, I'm a property investor, okay, but I'm on a much smaller scale. So I was managing 30 properties at some point, and then I kind of scaled back, and now I have a lot less. I have only one now. But the question I have is, like, why should people consider doing that, like building a real estate fund versus just like, buying one property, buying another, and so on, or like buying, let's say, properties in conjunction with other people? Why should they consider, for example, this particular strategy you're talking about? And what's the benefit of doing that?
Gotcha. So I think the value for this really comes down if you've got a thesis that benefits from scale, where if you have the ability to, for example, like let's pick a specific asset class. Like let's say you do small bay industrial, and if you have a specific thesis on it where you're like, hey, if we own 70% of the small bay industrial properties and this one specific geographic niche or one specific customer niche, and then we now have the ability to set the market, set pricing, have a better pulse on the market, have the ability to enter into longer term contracts with bigger players. Like if there's a benefit that comes from scale, then it makes sense to do so, because then you can bring in outside capital, you can get to that scale threshold a little bit faster. And then you've got the ability to kind of get a 1 + 1 = 3 outcome from that. If it's a world where you can't put a finger on like, hey, there's this specific benefit that's going to come from scale, then it's typically, to your point, makes more sense to buy properties kind of one off here and there and build up a portfolio from there.
Okay, so tell us, what's the strategy within building this real estate fund? As in, like, how does it?
On our side?
Yeah.
Yeah, so for us, we buy single family homes in really high-end school districts. That's our bread and butter. And by buying those homes in good school districts, we rent them to families. Most of the time, we've got kids about to start high school and want to stay in the area for high school. Tends to be a long-term lease. We typically sign about 28 months at initiation, and it's a family that is basically moving in freshman year. They're going to stay until their kids graduate senior year.
Thank you. Why did you choose this particular strategy, and why is this strategy better than other strategies that exist already in terms of property investment?
Yeah, so for why this particular strategy, part of it was there's a couple of different elements. One is like I moved a bunch growing up, and my mom's a teacher. So by moving every single year growing up, with my mom being a teacher, I was able to see like, hey, it's kind of a universal human thing here. Like no matter where I live, there's a really good school district in the area. People knew about it, and like the school district was kind of a driving factor in terms of how people thought about where to live. The call it more business side of it is, at its core, like it's the biggest supply-demand imbalance I think I've found in real estate, where there's a lot of demand to get into really good school districts, and there's very limited rental supply. It's almost exclusively areas where owner occupancy rates are 90% or higher. Nationally, they're about 60-65%. There's typically no land left. Basically, every plot of land that could have a house has a house on it. And it's typically areas that don't have multifamily, and they don't allow new multifamily development. So you've kind of got a situation where you've got like a cap on what supply could ever be, and you've got the demand to be there. So if you're basically sitting in that supply demand intersection, you've got the ability to rent the homes quickly at a really premium price. So that's the benefit, or that's the strategy at its core. Why it's better than different strategies, it really depends on investment objective. Like we view ourselves as a very high floor real estate asset. We think we're closer to like a bond of real estate, or like an AT&T stock of real estate. We're never going to beat the returns of like a successful multifamily reposition. But we also think that we're a significantly higher floor than that. So it depends on if someone's thinking more expansion or preservation for their individual real estate allocation.
Thank you. So what you help people with actually is not so much the property fund, it's more the building like a property portfolio where they can invest in these kind of single family homes in elite school districts. Am I right saying that?
That's right. So I mean, we're a fund, and we own a big portfolio of them. So when someone invests with us, like they're investing into the portfolio of homes that we own.
Okay, very good. So you're helping them to build their own portfolio. Okay, so tell me how it works there, like in terms of what are the minimum requirements and how does it work exactly, the process of investing with you, for example, with your company?
Yeah, so the way that it works, we're a 506c fund, meaning we can take on investor capital as long as someone's accredited. Our minimum is 250, and somebody can join into the fund, and they're buying into the existing portfolio that the fund owns at that point, and then we use their capital to go buy more homes. From there, we pay out monthly distributions, so investors get a monthly direct deposit from the actual operating income from the properties, and then they also get their piece of the equity, which, as we have principal pay down on debt, as homes appreciate, that should theoretically go up. We're also building the portfolio for sale down the line, so there's a possibility of a large check down the line. And then investors also get depreciation, so they get that on their K1. For most investors, that means our distributions should be net of taxes for the next couple of years. TBD on what the new administration does from a tax policy perspective, though.
Thank you. What's the difference between your strategy of single family homes in elite in elite school districts versus multifamily homes that could be potentially in a I think probably in a bigger buildings and that kind of thing?
Yep, it's entirely dependent on what someone's looking for from an investment perspective. The way that we view it, like the multifamily are significantly higher risk, but they also have higher return. We believe we are much lower risk, and it's a lower return profile as a result. So it depends on what investors are looking for. Most of our investors are very high net worth individuals who are more focused on the steady cash flow distribution. They're more focused on the stability of the investment. The multifamily deals, like they go to zero a lot more frequently than ours do. Our tenants are doctors, and our average tenant makes over $200,000 a year. Like, our tenants don't get evicted; they don't stop paying rent. You don't really see a $200,000 a year tenant in a multifamily building.
Thank you. What's the difference between your service, for example, and that of an estate agent?
So I'm not super familiar with what an estate agent is, so
Okay.
I'm probably not the best. Yeah.
Okay, like a letting agent, that would like rent out your property.
Oh, like a property manager.
Yeah.
It's different. On the property, like a property manager, like you own the actual asset. You're making the allocation decision. You're hiring the property manager. You're paying the property. You're paying the insurance. You're paying the property taxes. You're day to day in an operational role. With us, our investors are LPs who are they're limited partners. They're not involved in the day-to-day operational decision making of the asset.
That is so interesting. Okay, so tell us more about why you chose this particular way of investing versus many other possibilities.
I think it came down to, number one, I believe in the thesis of single family homes in good school districts. And then number two, from a structure perspective, like, we are an asset class where there's benefit of scale. From on the vendor side and on the ability to increase rents, our market share in our zip codes is 8.61%. That's weighted across all of our zip codes. As some of our zip codes are higher, there's a pretty clear correlation with our ability to increase rents. So we believe in the thesis and believe in what we're doing. So it made sense to invest in this path with the ability of a fund to get benefits of scale from it.
Thank you. Tell us more about the scale of your company in terms of like how many people you've helped already and what kind of results they've managed to achieve already in terms of their property investing strategies.
So from our fund perspective, we've got about 50 LPs in the fund right now. As a fund, we're up, and we're ahead of projections right now from an equity perspective, and on a distribution perspective, we're right on schedule. So the return is mid-teens right now, and we expect that to continue for the foreseeable future.
Thank you. What is the minimum required in order to start joining one of your property investing schemes or property investing projects, let's say?
Yeah, so it's a $250,000 minimum investment for us, and we can only work with accredited investors.
Okay. And what other things do property entrepreneurs need to know in order to start working with you?
It's a good question. We found that folks who have been active LPs in the past tend to, for lack of better words, be a little bit more up to speed on the fund structure and what things look like, and what reporting norms look like, what communication norms look like. And then we blow those out of the water. We're much better at the communication than we found than most funds. But it is helpful if someone's been an LP in the past. Across our investor base, I think about 80% have already invested as an LP, and we're just another slice of their portfolio. We do have folks who are first-time LPs with us. We've found it tends, for some first-time LPs, we're a good fit. For some first-time LPs, we're not a great fit. It really depends on what they're looking for from a risk-return perspective.
Thank you. What is an LP?
Limited partner, meaning an investor who joins into the fund.
Okay, very good. And tell us more about your journey of how did you start doing this and why you chose this particular strategy?
Yeah, I mean, so part of it came from my mom being a teacher and me moving a bunch growing up, and that personal experience of saying like, hey, like school districts really drive decision making. The other side to it is like fortunate to have learned from a lot of really smart business folks who've done some really awesome stuff, and fortunate to start my career in a company where I could kind of get into rooms that I probably shouldn't have been in, but learn how decision making is done, and how do you get an asset with the right to win, meaning how do you get in this position where you've got that undeniable competitive advantage, which we think a really good school district is. So as I got that education, as I got that experience, and then applied that to the real estate context, like it made the most sense to go down this path.
Thank you. Are there any ranges of a return on investment in terms of like percentages that your current investors have been able to get from investing in this kind of project?
Yeah, so our forecast right now is a 14.2 IRR. We are above that right now. But we're forecasting 14.2 on the IRR for the.
Okay, and what are some of the most exciting projects that you're working on right now?
So we're super focused. So all we're doing right now is the single family homes and good school districts, and we've got really nothing else on the horizon other than continuing to raise money, buy great homes, operate great, manage the data across great homes, and then just continue that process. That's at its core, it's what our day-to-day looks like.
Thank you. Are there any particular areas that you're focusing on in terms or countries? And if yes, what kind of indications would you have for property entrepreneurs wanting to use a similar strategy?
There's a couple of places we do have a geographic focus. We're focused exclusively on the upper Midwest. And that's from a like reverse engineer perspective. So our board of advisors, we've got a gentleman from Blackstone, we've got a gentleman from Tricon. We've spent a good amount of time with some of those large SFR portfolios, and we're basically trying to reverse engineer a portfolio that we can sell to them. And the strong belief we have is if we're going to try to exit this portfolio in the 2030s, the best way to do that is going to be to position the upper Midwest. We think that's where the puck's going from a geographic perspective. And that's really insurance driven. So from like a advice to other folks, like I would go into any real estate acquisition with the mentality of, in most cases, you're going to sell the property, and go into it with the understanding of you are from day one trying to position the portfolio for sale, or the property for sale, and where can you buy a property that will be attractive to sell 10 years down the line.
Thank you. What's a good way to get a desirable property in near a really good school, near an elite school, at below market value price, or at a relatively good price that will allow you to make profit before you even bought it?
Yeah, I really think that comes down to market awareness and how sharp you are in the market. And like, I I would spend an hour or two on Zillow every single day studying one specific zip code, and do that for 6 months before you make any acquisition. So that's what 180 hours worth of study on a specific zip code. Because once you do that, you're going to get to a point where you're going to be in the top 1% of that market from a market awareness perspective. And that will give you the ability to start recognizing good deals, recognizing when something's mispriced. For all of our zip codes, we know every single home in every single zip code that has sold. We track 37 zip codes that has sold in the past year. You can show me or my team a picture of a house, and we'll know the exact address. We'll know how long it's on the market for. We know what it's sold for. We know what its asking price is. So when new stuff comes on, like, we're quick on it. We understand, like, hey, that home is massively underpriced. But if you can't do that, then it's going to be really hard to identify what those good deals are. And it's not super hard. It's really just a time commitment perspective of like spending the time to get super sharp in the market.
Thank you. Do you leverage AI for property research? And if yes, let us know of how property entrepreneurs can leverage AI in order to find the right property.
We don't use AI right now. We do have custom software that we've built. It doesn't have AI integrated in it right now. The leader in the market right now is a company called Foxy.ai. And they use an LLM trained on photos to basically score the quality of a property based off of the photos. If we do use AI, that would be the one that we would use. They definitely seem like the leader in the clubhouse. So Foxy is what I would suggest people keep an eye on if they're looking for AI.
Thank you. In terms of optimizing the look of the property to make the price as rentable as you can say, as to make the price as high as possible in terms of rent, what would you recommend in terms of AIs or other tools that can help to optimize the look and the staging of the property?
Good question. We don't do much from like an AI or staging standpoint. We typically buy the photos from the listing agent, and they're typically already staged. So that makes it easier for us because we can just plug and play with the existing listing photos. The listing agent typically charges like $100 to $150 for them, so it's not that bad from a cost perspective. From a making the property look appealing, like there's definitely some data points that you can start to gather. Like, for example, like we buy in the upper Midwest, it is nearly impossible to rent a home with a pool. People just don't want it. They don't want to deal with the hassle of a pool in Wisconsin because you don't use it 8 or 9 months out of the year. I would imagine if you buy homes in like Florida, for example, like you probably should have a pool if you want to rent those houses. But getting sharp on like what characteristics people are looking for in your market make it a lot easier to kind of pick the characteristics that'll make the home look appealing to rent it.
Thank you. What are the top most unheard of ways of getting below market value quality properties in elite school districts? Speed
for sure. All of these homes have get a lot of offers because they're good homes in good school districts. So you need to be first offer for sure, and you need to be, at the end of the day, like you need to be the easiest client for the listing agent to work with. So they for lack of better words, want to steer their client towards you. So for us, that means being first offer out the table. That means representing ourselves so the listing agent could double in the commission. And it means portraying ourselves as experienced buyers who are not going to nickel and dime them over light bulbs being out on the inspection report, but are an easy party to work with. And then in that case, it's like, okay, they can go to the clients and be like, hey, we've got a fast offer. It's a strong offer. It's an easy to work with client. And it's hard to beat. In that case, we win 55.1% of our offers. And that's really how and why we can do it.
Thank you. What about these like some unheard of kind of like ways to kind of get these below market value properties? Like I know partnering with an accountant or partnering with I know people who tend to deal with a lot of these properties that need to be sold at auction, or I know that kind of thing. Is that a good strategy for getting leads of landlords that want to sell quickly and below market value?
Possibly, just not in our zip codes. I mean, we're typically buying homes from doctors. They're typically not at auction. So it very well could be. I wouldn't know because we don't see it much in our zip codes.
Okay, very good. So tell us where entrepreneurs can find you.
I'm on Twitter. I tend to tweet quite a bit about just like what we're seeing and doing on a day-to-day basis. So I'm Shano.15 on Twitter.
Follow us for more interviews with world's most influential business titans, providing you with the insights to awaken to your full potential so you can get paid to be yourself, find true happiness, and manifest